Global stocks are this morning in free fall.
Dow off maybe 1,300 points, 200 on the S&P.
Goldman Sachs raising the probability of a U.S. recession to 35%.
Minimum of 10% tariff on all imports.
Hi everybody. So in the past 20 days, US stocks lost over $4 trillion. Remember a few months back when Trump got elected, investors were optimistic about the market. But right now, the market is in a bloodbath. President Trump made a big announcement on April 2, 2025 about new tariffs. Tariffs are like extra taxes the US puts on stuffs coming from other countries. The idea is to make foreign products cost more so people will buy things from US instead. A 10% tax on everything coming in. Starting April 5, 2025, almost all products from other countries like clothes, phone will get an extra 10% added to their price. Bigger taxes on some countries. Starting April 9, 2025, countries that sell way more to the US than they buy from US will face even higher taxes. These are called reciprocal tariffs. The market reacted violently because tariff means higher costs for consumers, supply chain disruption, potential retaliation from other countries. Investors are trying to move to a safer side, which is bonds and cash. Bonds are like loan you give to the government or companies. They pay you interest over time and return your money later. But these market moves were already predicted by several indicators weeks ago. Smart money were making their moves months ago. This is not the first time the market is crashing. We have seen this movie before. 2008 financial crisis. The stock market lost nearly 50% of its value as the housing bubble burst. Banks collapsed, millions lost their homes, and unemployment skyrocketed to 10%. Here's what Warren Buffett did during this time. While everyone panicked, he invested $5 billion in Goldman Sachs through preferred share with a 10% dividend plus warrants to buy more share later. He made $3.7 billion in profit by this single move. 2020 COVID crash. The fastest 30% drop in the market history happened in just 22 days. During both crashes, the pattern was the same. Massive panic selling followed by tremendous opportunities for those with cash and careers. Major Wall Street firms are sounding alarms we haven't heard since 2008. JPMorgan's latest reports warns that inflation remains sticky despite Fed efforts, and this tariff situation could push us into stagflation. And here stagflation means high inflation with slow economic growth. Goldman Sachs analyst predicts these tariffs could add 0.5% to core inflation, potentially delaying any Fed rate cuts and prolonging economic pain. But even more telling is what insiders are doing. Corporate executives have been selling their own companies here at the highest rate since early 2020. They know something is about to happen. In the past few days, the Federal Reserve has been aggressively hiking interest rates to control inflation, but high rates slows down the economy, hurt businesses, and make borrowing ever more expensive. This directly means that the companies struggle to grow, stocks lose value, and investors pull their money out from the market, which also creates a ripple effect and the market tanks. The next factor is massive layoffs and weak earnings. Big tech companies are laying off thousands of workers and corporate earnings aren't looking that great. That's another warning sign that a recession might be coming. Robert Kiyosaki, the author of Rich Dad Poor Dad, has been warning for years about a major financial collapse. According to him, the current economic system is unsustainable and we are heading toward a severe market downturn. He believes that the US dollar is getting weaker due to excessive money printing, rising national debt, and government mismanagement. He also argues that the Federal Reserve policies such as raising interest rates while inflation remains high are only delaying the inevitable. He has been stating that the crash is very much near and the Fed and reserves are lying to us, and this crash will be much more harsh than 2008 and 2020. His core strategy during this recession is remarkably straightforward. Hold physical assets like gold, silver, and Bitcoin. Maintain cash reserves to purchase distressed real estate. Focus on cash-flowing investment rather than speculative growth stocks. Warren Buffett himself is sitting on $160 billion in cash reserve because he knows something which we don't. So what exactly should you do in order to save yourself from this falling market? Protect what you have. Review your portfolio and reduce exposure to high speculative growth stocks. Ensure you have 6 to 12 months of living expenses in cash or cash equivalents. Pay down high interest debt immediately. Position for opportunity. Set aside investment capital now before the bottom. Create a watch list of companies that you would love to own at a discounted price. Consider building position gradually by using dollar cost averaging rather than trying to time the exact bottom. Diversify strategically. Add some recession resistant assets like consumer staples, utilities, and healthcare. Consider small positions in traditional inflation hedges. Look at dividend aristocrats like companies that have raised dividends for 25 plus consecutive years. What not to do. Just as important as knowing what to do is knowing what to avoid. Don't panic sell after big drops. This locks in your losses at the worst possible time. Don't try to time the market perfectly. Even professionals get this wrong. Don't invest money you'll need in the next 1 to 2 years. Market recoveries can take time. Don't neglect your financial education. Understanding market gives you confidence during volatility. And remember one thing, you can never win in a falling market. The only thing you can do is to avoid it. With that being said,
Something bad is about to happen.